You're listening to the Real Estate Runway podcast, powered by QUATTRO Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family. Today we're going to talk with a good friend of mine, Mr. Timothy Lyons with Cityside Capital. He and his brother Greg, they are fantastic individuals we've known. They play a little more on the capital aggregation side, and we're going to talk with him and his view on where we are today. Also hearing about his fantastic story is coming up from a firefighter and ER nurse and getting into real estate. Very practical dude. And he works with a lot of retail equity like you and me, and with institutional equity as well. So he has a wealth of knowledge of what's going on in the world today and just everyone's thoughts on it. So without further ado, let's get into that episode. But before we do, if you get any value out of this episode, please leave us that 5-star review or thoughtful comment. They're worth their weight in gold. It's how we spread the word here on the show. It's the only way to advertise the show. And if you have something funny to leave, we do read the comments, so please leave it there, and we'll see if we can respond to you there as well. If you want to follow us on social media, we're on all the socials at Team QUATTRO Capital, one word, no special characters, or at thequattroway.com. If you want to apply to be on the show, visit us at thequattroway.com/podcast, available in the show notes. And we look forward to hearing from you. If you want to reach out, request a topic, just say hello, email us at podcast@thequattroway.com. Without further ado, let's get right into the episode. All right. Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast, take 12. We have had some tech issues, but bro, we are here. We are here, baby. We are here. I'm welcoming to the show today a good friend of mine, Mr. Tim for short, Lyons with Cityside Capital. Tim, welcome to the show. How's it going, my man?
Chad, thank you so much for bearing with me today. I'm so happy to be here, and it's just good to see your face again.
Yeah, man, likewise. Well, I know you, but everyone else doesn't. So before we get into the content today, what I'd love to do is kind of walk your background of where you came from, what you've been doing, how you got into the world that we live in today and alternative and real estate investing, and then we'll get into the content of the show today. So before we do that, let's get right into a little bit about you, man.
Yeah, thank you for that. Chad, I grew up in a very modest upbringing household, right? Divorced parents when I was super young. If we talked about money, Chad, it probably wasn't a good thing that we were talking about it. And just really was surrounded by folks who subscribed to the old go to school, get good grades, take all the civil service tests that you can, because you know what? They have a pension. And so that's what I did, right? I took the New York City Police Department test. I took the fire department test. I took the county police exam. And all the while, I studied really hard and I was a good student. Ended up going to college, but then 9/11 happened. And I was a sophomore at Providence College in Rhode Island, woke up and everybody's running around the hallways talking about New York City's on fire. And when you're from New York City and people that live and work there, and I just knew there would be some sort of situation where I would know somebody. And I did. I knew a lot of folks that were affected either by death or just that were down there. And I chose that day, Chad, to become a New York City firefighter. And it wasn't out of the blue. I mean, as a little kid, I had a police scanner taped onto my bike handlebars so that I could race around town chasing fire engines since I was about 10 or 11 years old. So this wasn't something new, but I went from pre-med to being focused on being a New York City firefighter. And that's what I did. 2 weeks after graduation, I became a New York City firefighter. I worked in Brooklyn for 10 years. I got promoted to lieutenant once, and I now work in Queens. To people's amazement, I still am actually gainfully employed. I got 18 years on the job and just 2 more to go until I can finally realize that pension that people were talking about so long ago.
Thank you for your service and thank you for sharing that story, brother. And I think those on the phone will not be surprised to hear that at all, because 2 people affiliated with QUATTRO actually have done a similar thing. Ryan Buck, who is an alliance partner of ours, is a firefighter in the San Antonio area and continues to serve. He loves it. It's his way he gives back. And Maurice Philogene, Mo for short. Most of you out there know him. Good Lord, the guy did 7 different careers at one time for a time. I still swear he was a double agent, but anyway. But he was a DC police officer for many years, up until just last year, despite earning his financial freedom a decade back. So it's just amazing what people like you will do to serve our community and give back. So thank you for that, brother. I appreciate that.
My pleasure. And just a little side note, I thought I was cool until I met Mo, because
We all did, man.
he had a lot going on, and I was an ER nurse, right, on the side, and I was a firefighter, and I thought I was living the dream and everything. And I met Mo, and I'm like, oh, okay, I guess I'm just a average guy.
My favorite Mo story on that note, my favorite Mo story, I'd only been working with Mo for about a year and a half at that point. And he would regularly just pick up the phone and call me and say, "Hey man, I got to go to X country in the Middle East for 2 weeks. You won't hear from me. Just keep things going until I get back." All right. And click.
No
And that was
problem.
it. I was like, I swear he just went to overthrow a government or something. And I
Yeah,
actually questioned him on it one time when he was like, "I'll tell you after administration changes."
I
Anyway,
love it.
the many stories of Mo. So anyway, let's take a turn real quick and just walk me through, how did you get attracted to the real estate investment world and what you've been into ever since that happened?
So, Chad, real estate was always something that I guess I dreamed about. I was like a daydream real estate investor. It's something that I was enamored by. I wanted to read about it. I didn't quite understand it, but I knew people had gotten wealthy from it. And not coming from money and not knowing anybody who did real estate, it just wasn't like one of those things that we talked about. It wasn't one of the things I could just talk to my uncles or aunts or my dad or something about it. And but it always was stuck in the back of my mind. I start working as a firefighter. I very quickly go to nursing school because I like to joke that I was pre-med for about 15 minutes in college before I joined a fraternity. And so I had an interest. I was an EMT in high school, right? So I had an interest in medicine. So I went to nursing school while being a full time firefighter because when I walked through the doors of the firehouse, everybody had a side job. So a bunch of guys were nurses. They convinced me to go to nursing school. So that's what I did. But I was working between overtime in the firehouse and 12-hour shifts in the ER, level one trauma center, just craziness all around. I was working 70, 80, 90, sometimes 100 hours a week. And I'm taking you through a 10-year span of my life. But then my wife and I had three little girls in that time span. When they were super little, my oldest, when she was like newbornish, I felt bad not being home, Chad. But I was like, you know what? I'm doing the right thing. I'm making money. My wife is staying home with the baby. That's where she needs to be. But when they started to get bigger and then our family started to grow, the 70, 80, 90 hour thing wasn't working, right? I was unhappy. My wife was like, I need help. And so I was like, man, what am I going to do? So then you go down the rabbit hole of like, all right, what am I going to do with my life? And what I kept on coming to was real estate and owning businesses. And I knew that I really didn't want to buy a franchise and buy myself another job. But so I went down the real estate rabbit hole. Started with a three-family property with a friend of mine. And of course, because I was too scared to do it by myself. And I didn't do a single family property because I was, again, too scared to own a single family. So I went for the 3 unit. And I figured if I could just have one unit rented out, that could pay the mortgage and I could figure out the rest. Well, I ended up doubling my capital in 2 years, rode the wave up, and realized in that time frame that I hated being a landlord, Chad. I didn't, first of all, I bought myself a third job. I was still a nurse. I was still a firefighter. Now I was a landlord. And I was about 45-minute round trip. I'd barely get the leaves or the leaves raked at my house or the snow plowed at my house. And then I had to figure out who's going to bring the snow blower down to the rental properties. My wife started to be like, I thought this was passive income, Tim. This seems very active. So she was right. And I thought I was going to buy 30 of those things and be on Easy Street one day. And I realized that that wasn't the case. I hated being a landlord. I loved real estate. I loved the tax breaks. We had the proof of concept with the cash flow and the better tax return. So I started to dive into like podcasts in a big way. I started to go down and just own Barnes and Noble, Amazon Books, my library, and just an Audible and just on a content super tear. And multifamily kept on popping up. And in my mind, Chad, multifamily is confusing. It's for people in suits on Wall Street. It's not for a Tim the fireman, Tim the ER nurse kind of guy. And I had to overcome those limiting beliefs. And I said to myself, if those guys can do it, so can I. So what I did was I found a mentor. I got educated. I really leaned into the process and what I call R&D, rip off and duplicate, because we're not inventing real estate. We're not inventing multifamily or anything like that. But I just learned the rules of the game and I hit the ground running. So to bring you up to the present day, I am a registered representative of a broker dealer that raises capital for commercial real estate projects. So I like to joke, Chad, that I am actively passive because I get to see behind the scenes of a lot of different operators, their acquisitions, their debt financing, their property management and asset management. And I get to choose and decide who I want to work with, what projects I want to raise capital for, put my own capital into. That's the actively passive side of real estate.
There's so much to unpack there, Tim. And I love the story of you realize, wow, I need this passive income thing, whatever black box it comes from. And they're like, oh, let's go get a black box. And like, well, shit,
Hmm.
this isn't passive because I'm doing all the work. Then you start to figure out, okay, well, maybe I can be an owner or acquire this thing that I thought was only for people on Wall Street or Main Street. And here you are. And your chosen value add with your company is to, under a registered broker dealer, put capital into the right operators who operate these transactions or operate these assets. And you're no longer plumbing toilets or blowing snow or anything like that. It truly starts to become, you do what you really do really good best. And I hate the term passive income. I don't know if you do as well, because really it's not truly passive unless I'm like me, I'm placing money into someone else's deal and that's it. Then it's passive. But when I choose to be the active operator, I'm still running the building, but it's more from a portfolio perspective. They're more of like dealing with macro level economic things in the deal rather than turning over leases and toilets and work orders and all that kind of stuff. So it's quite the journey, man. I got to say.
Well, thank you. And I totally agree. Like passive income to me sounds like financial freedom a little bit. Like it's one of those clickbaity type terms that like if you type it into YouTube, you're going to get all sorts of like crazy videos. But, one of the things that I really leaned into was taxes. And the passive activity rules is like my favorite thing to read in the IRS guide. And you
Yeah.
might think I'm strange, but when you understand the rules of the game that so many other people have taken advantage of, it really is a mindset like paradigm shift about my active income and my passive income. But yes, from where I sit today, I am so happy I did what I did because look, I retired from the ER. I like to say that I retired. I'm 40, but I retired from the ER as a nurse and I got into real estate basically full time. And for the last 4 years, I mean, my brother and I have been a part of nearly $2 billion in acquisitions across the United States. And if you would have sat me down, Chad, and told me that 4 short years ago, I would have probably tried to talk you into the nearest mental facility because there's no way that I thought that I could be a part of something like that.
Yeah, that's just incredible. And the things you've seen since being part of those 2 billion in transactions, which is really where I want to take us today, brother. So as of this recording, we're in late March 2023. It's an interesting world out there. And as a big part of our audience here on the show, we have both investors who are actually, they're vetting us, they're vetting people we bring on the show and looking at maybe they want to place money with these individuals. And some are operators who are up and coming and they come to this show for a voice of reason and a path forward and solutions. And so I want to talk to both of those people when we have both those avatars and we have this conversation. But let's talk a little bit about what it feels like, looks like to raise capital today in the market. We have a lot of uncertainty going on, so we can start with whatever you think is relevant to build that up. But let's talk through that, and that may lead to some of the fear out there right now and how we overcome it. But let's, where do we start that conversation with someone who's focused on that particular aspect?
People always ask me, I thought you were in real estate. And I say, I am. And they're like, well, don't you raise capital? I'm like, no, I do. So basically, when I was starting this journey, I realized that it's a team sport. And coming from, I guess, the New York metropolitan area, like making money isn't really a team sport. Like you want to hold on to what you have, right? And with the real estate, you want to drive by your own property. You want to be able to see it, touch it, feel it, mow the lawn, look at the neighbors. And I had to get over that. I had to get over this is not going to be my backyard. And I had to get over the team aspect of it. And when I did, my whole world opened up, right? Living in New York and still being a New York City firefighter, I wasn't going to be picking up my family and moving to a sexy location like Nashville or Sarasota or Dallas or Phoenix, right? That wasn't in the cards for me. So I wasn't going to be the boots on the ground. So I really wasn't going to be like maybe the asset manager or the property manager because I didn't have any experience. I wasn't going to be the underwriter, Chad, because who's going to invest with me? And it's like my first spreadsheet ever. And I'm not a great underwriter. Someone said, well, why don't you see if you can reach out to your network and see if they're interested in coming alongside of you on one of these projects? And I was blown away. I was like, yeah, I'm like, I can do something like that. Right. And they're like, yeah, how do you think we got started? Listen, man, armed with a Yahoo mail account, I just wrote an email to basically anybody I thought that had money. And I got some pretty interesting responses, Chad, on that first capital raise. But, that's how I got started. And I realized that since I wasn't going to be boots on the ground, an underwriter, a acquisitions guy, whatever. So I really leaned into the equity space. With that being said, Chad, raising money is a very funny thing, especially when you're raising other people's money for deals. It's considered a security if you don't have a material participation in the project. So if you're not the acquisitions guy, if you're not doing due diligence, whatever, and you're just raising money for someone's deal, a little bit shady, a little bit, right? So
Yeah, there's
once
no
I heard
issuer's exemption at that level, right?
there's no exemption at that level. So I had partnered on my first three smaller deals, I guess, and I realized that I could raise money, right? I raised 150 for my first deal. I thought I was like on top of the world because I didn't think I could raise $5. And then I raised 600 and then 650. And I'm like, wow, this actually works. And I'm pretty good at it. And I actually really like educating folks and talking to them about their situation and telling them about the benefits of real estate and how it's worked for me. And I could probably build a business around this. And that's what my brother and I did. And we ended up getting introduced to a broker dealer who raises capital for operators like yourself in areas of the country that we want to be involved in. So we got introduced to them. I had to take 3 exams, Chad. I thought I was done with testing, but I wasn't. I
Nope.
got my Series 82 and I got my Series 63, along with a intro exam called a Securities Industry Essentials exam, the SIE, and started working for my own company under a broker dealer. And it's just been a wild ride since.
Yeah, it's pretty incredible, man. So that's how you've gotten into it. And so what does it look like raising money today? So and that's a good credibility piece because you're not coming at it from, well, you are coming at it from the private equity side, but you're coming into it from a blend of institutional and pure individual private equity. So, what does it look like today? What does it feel like out there?
Good question, right? I can't wait to wake up every morning and just start looking at my phone and saying, what happened overnight in Asia? What's going on with the bond prices? And
Yep.
people think I'm crazy, but that's just what I'm up to, because what's the VIX and what's the move going and what kind of day we're going to have? Because right now there's fear, there's uncertainty, there's no clarity. And that goes for institutions down to your retail investor. There's just so much going on, right? We have interest rate risk, we have geopolitical risk, we have a banking crisis, a budding banking crisis, we have liquidity issues, we have uncertainty in the jobs market, right? We're facing a recession if we're not already in. Who knows what the definition is today about a recession? With that being said, we're still pencils up, right? We're still pencils up and we're looking at deals because even though there's uncertainty, right? And we always talk about our investors need to have the 3 C's. And I'm sure you've heard this before. It's clarity, confidence, and certainty. And unless somebody has clarity, confidence, and certainty in the operator, in the asset class, in the market, in their particular deal, they're not going to invest with you. So right now, what we're finding, Chad, is that the more experienced retail investors, people that have been investing in real estate for, say, 5 to 10 years or more, they're still dropping in 50, 100, 250 into deals. The brand new or the 0 to 5 year investor that maybe has 1 to 3 passive deals or something like that under their belt, they are pencils down and they're looking at CNBC and waiting for the shoe to drop, and they're just paralyzed. As far as the 1031 space, because we help 1031 investors also place capital into bigger projects, the sales, they're coming to a slowdown too, right? It's only people that are either really nervous and want to get liquid, or number 2, they are coming up on a balloon payment and they need to exit because right now they can't refinance into favorable terms. So a lot of things have slowed down. Here's the caveat though, and you and I get this, right? But there's deals out there because there are an incredible amount of syndicators or operators across the country that bought an incredible amount of real estate in the last 3 years, and they use bridge debt, right? They use 3-year bridge debt with 2 1-year extensions, and they bought a 3-year cap, hopefully, if not a 2-year cap. And right now they're escrowing an incredible amount of funds to buy a new cap when that 3-year deal expires. And the caps, Chad, do you even want to talk about cap prices right now? They're incredibly high.
Yeah.
And so people are in trouble, right? People are going to be in trouble. And that's where, in my opinion, that's where we're going to shine, because we're going to be able to step in and help those folks out to live another day and to save their deal, but also find something at somewhat of a discount.
Yeah, I love that. What you pivoted to is, look, I get it. There's not certainty, clarity, and confidence out there. But, what I think Tim is saying and what I'm going to echo is times of uncertainty, and especially recessionary times. 2008, which was one of the global financial crisis, biggest one in history that we can remember, made more billionaires, not millionaires, billionaires than any other time. What Great Depression, same way. Because when times are tough, when liquidity is a challenge, when you're, and I say this a lot, you only get in trouble in real estate if you run out of two things: time or money. You have a balloon payment coming, you have to buy a new interest rate cap, and you can't because you don't have the money to do it, or you're bleeding out because of an interest rate, you're running out of money. Those two things cause people to sell. And just like Tim said, no one's here to take advantage of anybody, but people will literally give their assets away, like for huge discounts if it means, okay, let's just cover costs, get out of this thing. We're not making a return or not much of one, but let's just get out of this, live to fight another day. And henceforward, Quattro or Cityside has now picked up an asset at a steep discount. It's this fantastic way to think about it. That is the calm in the storm that I'm talking about. Just remembering that this is a long game. We still have a housing crisis. We didn't just automatically snap our fingers and build the 10,000 units we need. We built a lot, but we haven't built enough. So it's just a very interesting perspective you have there.
And here's the thing, there is a lot of noise out there, Chad, right? I mean, social media, YouTube, mainstream media, print media, emails, newsletters. There is so much noise. So how do you figure out who to trust? How do you figure out where to get your good information from? And I'm not going to tell you where to go. You have to, you can decide who you want to listen to. But when you surround yourself with high level people that are doing the thing that you want to do, it is comforting to know that there's like-minded folks that you can lean on, that you can hop on a call with. You want to talk real estate with Chad, you hop on a call with Chad and say, hey, listen, this is what I'm unclear or I'm uncertain about. Can we talk about it? And listen, I'm in 3 different masterminds. Some are real estate focused and some are not. But this is what we talk about, right? And when you're having a shared experience like that and you're able to surround yourself with smarter folks, you can come away with an insane amount of clarity to actually make the deal, to move forward, to wire that money. So that's the beautiful part about it. You mentioned housing crisis, Chad. There's a guy that I follow. His name is Mike Simonson from Altos Research. And he does a weekly podcast and YouTube, and his company, Altos Research, does proprietary data sets on the housing stock in America every single week. How many houses are for sale? What's the average price? Are they coming down in price? Are they coming up in price? And he just put one out yesterday. We're still at, I think, 432,000 single family homes for sale, when arguably 800 to a million, depending on who you talk to even 1.2 million is a normal equilibrium for those single family homes. Right. So even if it's 800,000, we're at half of what we need. Half. And if it's 1.2 million as the equilibrium number, we're at a third, right? Or we're cresting over a third. It's amazing once you have an investment thesis that you have actually researched and you understand how you can really sleep well at night. Chad, I don't know about you, but I sleep well at night. My net worth is pretty much 100% into real estate. And yeah, I mean, it's all about just being educated and then taking that action.
I agree completely. And Tim, I think the last I looked at the numbers, we were about 65% homeowner, 35% renter nation or something to that effect. And growing, by the way. We're growing in renter nation because the housing supply for that 65% is not there as much as it did, right? And so as households, home formations are formed, that 35 is growing. So when you think about it, if I'm going to invest in anything, I'm going to put my money in something, it really needs to be something that humanity is always going to need. For example, I could have invested in the slide rule. That's a piece of technology that is now obsolete because of this phone I'm holding right here that has even obsoleted the company that made the graphing calculator. I mean, just for example. So I know they're still there, but they're not as dominant as they were. You think about housing and say, well, if you started investing in housing and you're 100 years old now and you started investing when you were 30, right, back in the early 1900s, right, then you're still going to be investing in the same space. You're still going to be making a profit in that space. It's changed over time. I mean, 3 basic needs of humanity, other than certainty, clarity, and confidence, is food, water, shelter, right? Shelter is something that is always going to be a need. It is a long game. It is something we're not going to snap our fingers and all of a sudden it just ends. So it's like when you're thinking about, okay, you have to focus on the micro environment, Tim, and I'm curious your thoughts on this. You have to focus on the micro environment because there is such thing as an unsafe transaction. And we alluded to a couple of those. But if you're finding a way to make sense of a transaction, especially in tough times, and I know debt is expensive, but basis is forever. Debt is temporary. Now, there's such thing as dangerous debt. Debt can ruin your day. It can take your transaction away if you do it wrong, or force you to sell at a bad time. But if you can somehow stomach the debt today and take advantage of what we're already seeing 15 to 20% reduction from where we were just a year ago. Now, I know we're just coming back down to where we were in 2019, but still, we're seeing massive reduction in price right now and climbing. Hopefully, it may not go too much further. We can talk about that too. But my opinion is basis is forever, debt is temporary, as long as you don't get yourself in trouble. What are your thoughts?
Yeah, I mean, other way I've heard that said is date the rate and marry the asset. Because I love that. I mean, listen, we're still buying. We just put out several deals this quarter, and some of them have been fixed rate, and some of them are still bridge. And we're saying to ourselves, listen, if we can buy a bridge at say 5.25 with a 3-year rate cap, and we're thinking where we are in the cycle in a year and a half, 2 years, I mean, rates might be back in the threes, back in the twos. I mean, I don't think we're ever going to get back down to federal funds rate of 0, but who knows? But nothing's forever. It incentivizes us to execute the business plan, to raise the net operating income, to asset manage that deal like it's our own home, right? I mean, because it's our own capital too. Yeah, you can date the rate, marry the asset. There's no doubt. Or the way you said it was date the rate and marry the basis. So it's definitely something that people who are experienced and listen, there's no shortage of experience out there. So find somebody who you can know, like, and trust, and just try to hang around them as much as you can, because in this market cycle, that's what you're going to need. You're going to need folks who have been in the fight before. So, Chad, how did I do answering that question?
I think you did well. We're going to let you have the mic drop moment on this episode. All right, brother. So before we go, we got to give you a couple of questions we give to everyone. QUATTRO questions, that is 4. First question, what is your superpower in the space or life, and how does it benefit you?
My superpower, Chad, is just getting to know people. Networking is probably one of my favorite things to do. I can get lit up just by meeting new people and making that connection. Whether I'm coaching my daughter's 6th grade lacrosse team and they're nervous on their first day and just putting them at ease, or if it's talking to a room full of brand new investors, I just love to be in the arena like that.
That's incredible, man. So let's go the other direction. Give me a little bit of dirt. We've talked a lot about your experience today, but give me a failure in life. What is your biggest failure you can think of to date, life or business, your choice, and what'd you learn from it?
Oh man, my biggest failure. I would say being on the 5-year plan in college was probably a big failure because I just wasn't ready to learn at 18 years old. I wasn't ready to make a decision. I wasn't ready to probably be on my own the way I was, joining fraternities and partying and whatnot. I didn't make the dean's list until my second semester junior year, Chad, after being like my top 10 in high school. I think I wasted a few years. So I would say that's probably it.
Yeah, that's fair, brother. Well, as QUATTRO has 4 pillars: people, property, profits, and then philanthropy, which in turn is taking care of people. So it makes a circle, if you see what I did there. Q, circle with a Q. Anyway,
I love
I'm being
that.
funny. Philanthropy, man. I love giving our guests an opportunity to share their philanthropic ventures, where their heart is, because you'd be surprised. We've actually had guests post in the comments that they have given to X charity on behalf of a guest that spoke to them. What is that for you? And I'd love to see if our following can help out.
Something near and dear to my heart are America's armed services and our first responders, obviously. So Greg and I support, through Cityside Capital, we support a charity called Tunnel to Towers. And Tunnel to Towers is an organization that pays off the mortgages for folks who die in the line of duty, or if they are gravely injured and need a smart home or something like that. And they're also attacking the veterans homeless crisis. That's their latest thing. So I'm on their under 40 executive club, and we also donate some of our profits to tunneltotowers.org.
That's a big honor, by the way. And I'm glad you got on that list already, because it sounds like you are 40. So
I
game's
did.
over.
I had to talk my way into it. I say, listen, I'm going to be 40 soon. Do you think I can still get into this thing or what?
Yeah, fair enough. I love that, man. And the last question, you are a podcast host as well. So I'd love to give you a second to promote your show and let listeners know where they can find you and get the tremendous value that you and Cityside Capital put out, you and your brother. What is that? Where can we find it?
Man, thank you so much, Chad. That's awesome of you. So our podcast is simply called the Passive Income Brothers Podcast. And we have very similar conversations just about what it means to be a real estate investor. How do you get started? Who do you turn to? What's going on out there? You can check that out at any basically podcast network and on our website, which is citysidecap.com.
Love that. And that kind of leads us to our last one, brother. What's the best way to get in contact with you, whether someone wants to invest with you, hear more about your story, just talk to you about the stuff we did today, or find something else that you have that may add value? How best do we find you?
So you can call me or text me. I'm at 516-521-7762, or my email address is tim@citysidecap.com. I'm on all those socials, but specifically LinkedIn is probably where I spend my most time. And just our website, citysidecap.com.
Fantastic, folks. And as always, scroll down on whatever modality you're listening to this to. All those links, phone numbers will be right in the show notes for your clicking pleasure. And Tim, thank you so much for coming on the phone, sharing your experience, sharing your thoughts on where we are today, and just being an addition to the certainty, clarity, and confidence for our investor base and yours now and in the future. I appreciate you, man.
Thank you, Chad. Thank you.
Holy smokes, that was a great episode. Thank you so much for listening to us today. Tim and I had a great conversation talking about what's going on in the world, investor sentiment, how you can think about things, and just helping everyone find some certainty, clarity, and confidence in the world today. Now, if you want to like us on the socials, we're everywhere. Hit us at Team QUATTRO Capital, one word, no special characters. If you want to email us, reach out to us at podcast@thequattroway.com. We'd love to hear from you. And if you'd like to be on the show, you can also visit us at thequattroway.com/podcast. And if I said that wrong, email us podcast@thequattroway.com, other way around. If you got any value out of this episode today, please leave us a review, 5-star, with a nice little comment saying what you liked about the show. Those really help us get the show out there and are the only way to grow. So with that being said, this has been the Real Estate Runway Podcast. Over and out, friends.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.